maybe at the beginning, 5,000-6,000 a month. And then, in 18 to 24 months, through the ability to scale that account value, they take us up to 2.5 million in tradable dollars that they'll give us. So every time we click a 10% milestone, they'll double the account. And in about 18 to 24 months, our goal is for our members to earn about 50 to 60K a month in passive recurring cash flow without doing the work themselves.
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to Watching the Financial Survival Network. I'm your host, Kerry Lutz. Well, these are dangerous times. Fortunes can be made and lost in the blink of an eye. Hopefully, you'll be the one making the fortune and not losing it. About to hear from Kevin Jefferson, a seasoned FX investor who can help you to basically earn passive income through FX investing, Forex investing. I'm really curious to hear about it. Kevin, you're a seasoned Forex trading pro. What's the secret of your success?
Well, great to be with you, Kerry. Thank you for the opportunity to chat with you and the followers of your podcast. Really, the bottom line is really understanding what you're looking at when you're investing in the market. And so a little bit about me. I've been in finance a little over 21 years. And I started my career actually as a stockbroker with Merrill Lynch. 2 months after September 11th, 2001, I was going through interviews. Yeah, amazing time, right? So I caught the market at the bottom. So if there's any confidence, I knew how to pick a bottom and really go and exploit that. But going into production in February 2002, obviously nobody wanted to buy stocks, and I think that period in my career with Merrill really it shaped a lot of how I saw a lot of things as it related to investing. And so one of the best things about getting into the industry at the time that I did, I had not lost anybody any money. And then the second best thing, or maybe actually the best thing, was I wasn't under any illusion that I had any secret sauce or knowledge that people in 1999, for those of us who were around back then, thought that they had. And then when 2000 came, they realized that they didn't. And so I actually provided value to business owners and entrepreneurs by helping them, decrease the cost of capital through their lines of credit. Merrill had a great business financial services sector. And so I exploited that gap. And what I learned at that moment was there's always opportunities. I was doing 1% LIBOR-based interest-only loans for wealthy owners who, refinance their houses for a penny on the dollar. And so what I realized was, as long as you're driving value, there'll always be an opportunity. And so I took that when I went independent, started my own firm in 2005 as an advisor. I always wanted to. I remember a client of mine, Mr. Sid Hutchinson. He was a retired tailor, and I was working for Edward Jones at the time. Between Merrill and my own, I went to Edward Jones for about 2 years. And I remember we were sitting at his table, and he was filling out some paperwork to buy a bond or something. And he told me, I've never seen anybody with an actual physical trade, or an ability to do something if they wanted to work that they couldn't work. And that stuck with me, because as an advisor, as a financial advisor, you're pretty much a philosopher, and you're a great salesperson, and you're selling ideas, right? But you don't really have a skill set outside of your ability to convince somebody to take action. You don't really have a skill set that will guide you in down markets in a lot of cases. And that was one of my biggest challenges with the advisory field, was that so many advisors really didn't know much about investing, in my opinion. Some did. My mentor, who was $1 million producer, when I came into production, he took me under his wings, and I saw him build out portfolios, and that really intrigued me. But back to the point, I wanted to learn how to trade something. And so I started off reading books on trading. This is obviously, the internet was still in its infancy. And so you had to go to Barnes & Noble and go pick up books and learn, and go actually spend hours reading about something in hopes that you actually got good information. Because obviously when you're Barnes & Noble, people are selling books, and so you don't know what's real and what's not. And so you have to do a lot of filtering. And so I would say that I stumbled across Forex in 2008. I was moving back to Texas. I lived in Alabama for a while, and I moved back to Texas, and I stumbled across it with CNBC had this thing called the Portfolio Challenge. And I had participated in it for several years, where, the best portfolio gets $1 million prize or whatever. And I never got the $1 million, but I did learn a lot about how I saw the markets. And so in 2008, FXCM had added the Forex component. And back then, the euro was twice as valuable as the dollar. And so I remember in this notional portfolio buying a lot of euro, not understanding anything about leverage or anything about what the risks associated were. And then I went back and checked the portfolio. It had expanded exponentially, like it had grown a lot. And so it caught my attention, and it kind of set me on that journey. And so I used Forex to become the trade that I used to create the income that I wanted for my lifestyle. And at a certain point, after a couple of years, to where I literally could have just gone to Harvard and got a degree for what I gave to the markets. I got mentorship. I paid, several $1,000s to fly out to someone and spend a week with them. And they taught me about market structure and how to look at the market from a wholesale standpoint as opposed to a retail standpoint. And so it really flipped the odds in my favor from being one of the 30% of traders who maybe win or have a few people win to the other side of the table. And I was able to replace my advisory practice income by becoming a trader. And so what makes trading Forex, I think, very, now the process that one uses or that I use to trade the currency markets is not any different than I would if I was trading the bond market or another commodity. I've traded oil on my strategy. I've traded crypto on my strategy. I shorted Tesla last year in April off the 800 highs. I bought it back at the 100 lows and told my friends about it so that they could get in, because some were big Tesla fans and all that stuff. So I only use that point to share that what I do is really agnostic to the market because it's all about supply and demand. Once you understand what the price cycle structure looks like, you can actually exploit those opportunities and increase your odds of success, which mine is about 78 to 80% hit rate on my trades. And so what I liked about Forex versus stock and equity trading was really the power of leverage, right? And so obviously leverage is what people do when they take out, loans or lines of credit, or they take out a loan from a bank and then they go invest it in the business. Obviously they're parlaying somebody else's capital at a cost to actually get, access to other opportunities without putting their own money at risk. And so one of the things with leverage was where $1 in the stock market for the layperson has to go up literally by 100%, become $2. In the currency markets, $1 would actually have the buying power of maybe $100. And so all you have to do is grow that $100 notional amount by 1% to get the same dollar. And you can do that on. And that allows you to get to the point to where now you're generating maybe annual returns on a monthly basis. When I say annual returns, maybe, 6 to 7% a month or more, if you're being conservative. And so I just like the aspects of it that allowed me to do more faster and collapse time in my favor and take the right kind of asymmetrical bets so that you can benefit.
Okay. So, you have to be a trader to do this. It sounds like you've got to be able to execute on a trade, get out of it within seconds if you don't like where it's heading, and on to the next. Can everybody just do this?
So the answer is yes. I believe most people can do this. Obviously, as in most things in life, everybody can't do everything. But my company, FMTrades.com, we actually started off in the DIY space, do-it-yourself trading. And coincidentally, I was just on the phone call right before we got on the podcast with one of my former students. He's always a student. So he's one of my students who came through my boot camp, and he was referring somebody to me. And I hadn't talked to this guy probably in 2 years, but he just remembered the experience. And so I've taken people from complete inexperience to being able to take their first profitable trade, probably, in a relatively, depending on what their interest level in doing it was. But what I found in my boot camps, when people would come into Dallas where I live, and we would train them in 2 days and get them up to speed to learn how to trade the markets. And then we would mentor them. There was a time back in 2018, a couple years before COVID, I had a lot of doctors come into my class. And so one of the doctors asked me, he was like, I love the information. It makes sense, but we rescheduled this class 3 times on account of me and my other doctor because we had our hours. And so their interest was in obviously creating that passive recurring cash flow, but they didn't have the time. And so he was like, how much would it just be for you to do it for me? And it kind of got me on the path of what we call DFY, done for you trading. And so now we've created a program to where people always get access to our online course where you can self-pace, and that's lifetime, to where you can actually learn how to trade yourself, because I do believe in empowerment. And so that's always the main thing. But now we have it set up to where our members can join our cash flow creation club, and we will build the cash flow on their behalf so that they don't have to do it. And what that did was, in the case of like the doctor, it freed up his time and really the perceived need to actually learn this very quickly. And so now you say, okay, I put it in the hands of a professional. They're building capital on my behalf. And now my ease with the process increases because, first of all, I see the cash flow increasing. I'm not having to do it myself. And then if I ever choose to, I can do it on the other side. And so we've actually ramped that up to where now we help our students work with prop trading firms. And what a prop trading firm is, it's a company that their business model is built on you trading their capital. And so now we have the Cash Flow Creation Club to where our members use prop trading money. So you become a member of the Cash Flow Club and you get access to, say, like a $200,000 trading account that the prop firm gives you. And you have the passive evaluation. So obviously, we help you through that process. And once you like pass the evaluation, now you're in the passive recurring cash flow phase. And so what we do is we use those accounts to build cash flow for our members without them having to do the work on their own as a member of our club. And so it's the ultimate passive cash flow thing. And it's the ultimate actually asymmetrical bet because they're leveraging our expertise or my expertise as a trader. They're leveraging the prop firm's capital, and all they're doing is committing their membership for us to do it on their behalf. And so that looks like, maybe at the beginning, $5,000-6,000 a month. And then, in 18 to 24 months, through the ability to scale that account value, they take us up to $2.5 million in tradable dollars that they'll give us. So every time we click a 10% milestone, they'll double the account. And in about 18 to 24 months, our goal is for our members to earn about 50 to 60K a month in passive recurring cash flow without doing the work themselves. Matter of fact, my tagline is I work with business owners, helping them build that cash flow without adding employees, overhead, or more of what I call the BS associated with being in business. And so the short answer to your question is no, they don't have to do it on their own. We've created a system that actually minimizes their risk to the point of not even having to put their own capital in the market. It has been very successful over the last 4 months since we literally started this program at the beginning of the year in February. We've added $15 million in prop trading firm capital that we're trading to build cash flow for our members. And so it's a great way for a lot of the business owners. We have real estate investors, people who come in groups and maybe, with the real estate market being the way that it's been, they come out of projects and they've got, capital on the sideline and, people want to always deploy that capital. And so what I've shared with them and showed them is that now they can become a member, add the cash flow creation system onto what they're doing. And now they can still be earning cash flow and still have their money liquid because they're not investing their own dollars. And now you can be earning maybe $5,000 or $6,000 a month while you're waiting on that deal to come along. And so it's a way to kind of buffer things, increase your cash flow, and keep your powder dry without having to feel compelled to go and take a risk that you maybe wouldn't take under other circumstances. So it's really about your creativity, man. Really, how creative you get. And the currency market is just because it's a 24-hour a day, 5.5 day a week vehicle because it's international. It really just gives you a lot of opportunities to succeed at that on a regular basis.
So how much you got to start with here?
Our membership is $15K, and that's an annual membership. So $15K for the first 12 months, and our goal is to get you about $6,000 to $7,000 a month starting off in passive cash flow. So about $60,000-70,000 a year off of that $15K, and then it re-ups for half of that on the anniversary because we paid a lot of the upfront costs of getting started already. So it's not very expensive. When you think about the cost of capital these days and what you can do. So we try to make the best asymmetrical bet we can while providing value at the same time.
And so how much your fees run on the service?
Sure. So the only fee that the only actually benefit to our company financially is our membership fee. So the $15K membership, the initiation fee, that takes care of all of our support and technology and everything that we do on our side. The members actually share the cash flow that they create with the prop firm 80-20. So the members get 80% of the cash flow. So that $5,000 to $7,000 is net of the 20%. And there's no other fee. They're not paying any monthly fees. There's no technology fees or anything like that. They're not liable for the capital because it's an agreement, a contractual agreement that the firm, how this works and how it keeps people going is that a firm is not allowing members to actually risk the whole $200,000 that they give them. They have really tight parameters, and that's why having a professional there helps them keep it within those guidelines. They only allow you really to risk maybe 3 to 6% of the account. So they're only putting out $6,000 to $12,000 in exchange for a 20% share of the cash flow that we create. And so if we fall outside those parameters, we reset, they reset us at $200,000. And so that's really the downside risk. Let's say we get to $2.5 million and we're generating $60,000 to $70,000 a month in passive cash flow. And then we violate the hard risk rule. So we blow the risk by, more than 3% in a day or more than 6% total. they'll start us back from 2.5 million down to 200,000. And so that opportunity cost of time of earning only 6,000 versus 60 to 70,000, that's the opportunity cost of time, and then also performance risk. And my worst year performance since 21, when I started the cash flow program at all, was 21.48% in the middle of 2021, right in the middle of COVID. So if you can deal with about a 1 to 2% a month compounded return, getting you about 40 grand off of a 15K membership, then it makes sense. There's no other cost associated with it for our members.
Interesting. So why was the return only 21% in 2021?
I love that, Dad. Thanks for pointing out the 1B that I had and all the A's that I had. Okay, thank you, Dad. So the reason that so that was the account. So we have two verticals. So obviously we started in a vertical where people are putting their own principal up and we grow it, and so that's a little bit more aggressive. And our goal is about 7 to 7.5% a month because we're trying to double their cash flow every year. And so the first year we ran it, what I wanted to do was actually just prove out that the model worked. And I wanted to be very conservative with that because I didn't want to scare anybody or, create any hiccups to where, people would be afraid. And so, when you generate a near 22% return when the market's going down, a lot of people become believers. And then when you ratchet it up, they believe in that as well. So it was really more strategic from my standpoint.
Interesting. So are you agnostic as far as where the market's heading, where the dollar is heading? And your
great question.
I
absolutely am. I truly look only at price and structure, price action and structure. And actually, I only trade. So the dollar is in between because the dollar denominates so much, right? But I only trade the British pound versus the Japanese yen. So I don't even really concern myself on a daily basis about the dollar. I do because it's built into the currency. But I trade one pair only, and the reason is I trade the pound yen is, first of all, it has enough of a daily trading range that will allow me, if the market is suited from a structural standpoint, it will allow me an opportunity on an almost daily basis. But then also the GJ is one of the toughest pairs to trade. And so I like that because it keeps a lot of people out of it. And then thirdly, the GJ is actually very predictable. It has a way of moving that kind of really repeats itself. And I found that philosophically it was easier. At one point I would trade 20 to 25 pair, I'm trading the Dow 30. I'm trading, all these different currencies. And what I realized is it's kind of like relationships, right? So you can date a lot of people and you can get to know a little bit about each of them. But once I really settled in on one pair, it's like almost kind of getting into a committed relationship. And then you start to understand the characteristics and the nuances of that pair to a point where you see things coming before they even happen because you focus your energy on that. So GJ gives me what I need as far as building cash flow, and that's all we've got to do. So I'm really agnostic to what the dollar does. I have to look up sometimes and look because people ask me about it, and I'm like, I really don't even know or care. As long as we're still in business as a country, I don't really care.
All right, I'll buy that. I'll buy it. So it's strictly technicals. You got an algorithm. I assume there's some kind of bot involved here, or are you just pulling these trades out of yourself?
Out of my cat. Well, it's true. Actually, I'm a discretionary trader, and I don't use any bots. One of the challenges with bots, in my opinion, what I've seen is that people who program them, they program them on a very suspicious set of presumptions. And so because those presumptions are faulty, a lot of times bots they'll perform for a short period of time and then they stop performing because they're taking assumptions that aren't right. That's built back on the premise that most people don't understand the true structure and nature of the market and the price cycle. And so I've only met one individual, an Indian gentleman out of New York. We're working on a platform in Dubai that I was invited to be a part of as an FX trader. And we were having conversations about automating the trading. And he was the only person who gave me an answer that I felt satisfied with because he understood market structure and the wholesale nature of it. And so to answer your question, I think the human element is very important in trading. And as long as you're disciplined, which is why I've been doing this for 15 plus years, as long as you're disciplined, you can make plenty of money doing it discretionarily.
All right. People want to find out more about you, connect with you on the web. Where is the best place to go here?
Yeah. Best place to go is FMTrades.com. FM like a radio station, trades with an S.com. On Instagram is the only place I probably post pics outside of LinkedIn. Instagram, my handle is at Help Made Millionaire, HELP Made, MADE Millionaire. LinkedIn is, I think, Kevin L. Jefferson, and then Facebook is the same. But just go to FMTrades.com. You can go to my social from there.
All right. Well, there's a link to it in the show notes to this interview on financialsurvivalnetwork.com. Make sure you go sign up for our free newsletter when you're there. If you got a question for Kevin, myself, shoot us an email, kl@kerrylutz.com. Interesting concept, Kevin. We'll definitely have you back on more to expound upon it further, learn more about it, and we'll talk to you soon.
Right. Thank you, Kerry. Great to be with you. Enjoy the day.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.